Welcome to the Fintech Times Presents series of webinars. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. So firstly, I'd like to say thank you to our online audience. And today we're going to be talking about what's the role of AI, artificial intelligence, in financial services. So we'd really like you to follow the conversation using the hashtag Fintech Times AI Workplace. Obviously follow us at the Fintech Times. With legacy infrastructure slowly upgrading, artificial intelligence has a key role to play in fintech and can be created with some of the rapid growth both digital services and challenger banks have experienced in the market. Through this webinar, we're going to explore how AI has progressed in the financial services sector, deciphers its key attractions for major players, and asks what SMEs and larger institutions need to look out for when considering the actual use of the technology. So today we've got a great group of people for today's conversation. We're going to be discussing several aspects of the general AI relationship between both the regional side of things and also the legal aspects of that. So what I was going to do first of all is just ask each of the panelists to give a short introduction to who they are and where they work. And perhaps we could start with yourself, Jessica.
Hi, I'm Jessica Rusu. I'm the Chief Data Officer at Chetwood Financial. So Chetwood Financial is a digital native bank that was founded in 2018. And so it's all based on data and technology and offering customers the greatest choice.
Fantastic, thank you very much. And then maybe coming to JS, could you give us a quick introduction?
So my name is JS Kang, CEO of Aizen. So we are AI company. We are AI technology company, and based on that technology, we are building automated banking operating system. With that technology, we are building the data economy and the traditional bank. So we are providing the Credit Connect platform based on AI.
Wonderful, thank you very much. And last but not least, Akshata, if you could give us a quick overview of yourself and who you're from.
Thank you, Mark. This is Akshata. I lead the FinTech and Emerging Tech practice for KARM Legal. We're a law firm based in UAE, and we've engaged with a lot of policymakers, SMEs, startups in the space of AI and FinTech, and there's a lot of upheaval of sorts that we're seeing in this space in the last couple of years. So yeah, very excited to speak with everyone today.
Wonderful. We're looking for some really interesting, insightful comments from a legal aspect from you today. Maybe if we go back to sort of Jessica and start with just sort of a general sort of question, you know, how maybe first off, actually, because I know from previously, what's the fundamental difference in your mind between machine learning and AI? And is it AI that we're using in banking, or is it machine learning that we're currently using?
Well, AI has been around since the 1950s, so artificial intelligence is embedded in many things that we're all used to, like navigation systems, your Google search algorithms. Previously, at previous roles, I was at eBay, you know, your recent searches and your related item searches, the Amazon Alexa that you have in the house. So artificial intelligence is everywhere. And then underpinning artificial intelligence, you have supervised and unsupervised learning methods, and machine learning is part of both supervised and partially supervised and unsupervised learning techniques. So machine learning is part of artificial intelligence.
Interesting. And obviously, you know, Chetwood Financial Limited, you're a new kind of bank. Have you very much been built with the concept of AI as a fundamental part of your offering?
Yes, so our objective is really to use data for power and to be able to offer customers that might not have the opportunity to access credit through our use of more sophisticated algorithms to identify those creditworthy customers and to offer them credit. So my team builds AI models, and we use them to deploy non-traditional scorecards in the sense that, you know, traditional banks will use logistic regression models, or other types of regression models have been around for decades. and utilized widely within the banking industry. But we find that nowadays, customer information, there's a much broader wealth of information. There's, social media data, device data, your credit history data. It might be even your psychometric type data. So there's all kinds of customer data available to us, and we can see the relationships between that data better in a nonlinear sense, and we can better identify the correlations between customer creditworthiness data and offer them a better price and a better credit opportunity using these kind of non-traditional models.
Okay, interesting. Maybe moving over to JS, kind of similar sort of question. Obviously, your company specializes in AI. What's your sort of difference between, as you see, machine learning and artificial intelligence?
Yeah, so what we are observing, what we are defining AI, we don't have a distinct segregation between AI and machine learning. So what we are trying to achieve is that the automated banking operating system, like ADAS in autonomous driving car. Like, for example, ADAS system is, if that ADAS system is embedded in the car, then car become a autonomous driving car. So in that stack, there's a lot of sets of algorithms. One sector is that identifying the objects and the predict and control and monitor. This kind of stacks are automatically conducted. For example, like when the car is moving, then the machine learning is identifying which is a human or the vehicles or trees. And the next step is calculating the speed of the next few seconds. And then the predicting our positions, and then the identify whether I am in the dangerous situation or the safe situation. And then control it when I am in the dangerous situation, then I can break it or turn it right or left. This kind of decisions are happening in the banking system. So what we are trying to achieve is that the whole banking system, especially in the retail banking sector, is a full process can be automated.
Okay, very interesting. And maybe moving over to you, Ashok, thinking about the differences between machine learning and AI, does that in your sort of without making it about law, but is there a fundamental description of difference between the two?
There is actually. So it's not to the extent of machine learning and AI specifically, but the idea that most regulators have taken is to determine which part of, let's say, the technical solution remains backend and which part of it interacts with the consumer. Which means that what is the level of reduction in human interaction is happening at the consumer level is what will help the regulator determine what is it and how is it that an AI or a machine learning solution should be regulated. So for instance, in cases of, let's say, robo-advisory or in cases of just use of AI in finance backend, at least, and I can speak of this part of the world at least, for instance, Abu Dhabi Global Market, which is a financial regulator, what they've done is that just a solution which remains backend and only supports, let's say, data analytics or just processing of certain parts of the transaction is not something that the regulator may necessarily want to regulate. But the moment you start collecting data, one, from the consumers in such a fashion that even it's the AI solution that is interacting with the consumer, and the outcomes of your advice or let's say the activity you're conducting is pretty much based on AI. When that is the case is when regulator steps in and would want to regulate it. So I think to that extent, yes, regulators do have a sense of what they want to call just machine learning and what they want to call, let's say, an interaction with an artificial intelligence solution.
Okay. I think that's going to be quite interesting when we come back and talk about some of the risks a bit later on. But maybe moving back to sort of Jessica, specifically thinking about sort of UK and maybe the European sort of market, what's the key areas do you think that AI has been adopted within the financial services, and what sort of areas do you think needs to further adopt those sort of services?
So some of the areas that have had a lot of success and are generally widely accepted for using AI would be fraud, for example, detecting patterns in transactions and looking at all of this kind of behavior and scraping it together to create this kind of behavioral pattern of bad actors, so we can identify customers that are maybe trying to create loan applications 30 within the space of 10 minutes. These kinds of credit card fraud, loan fraud, any kind of fraud has been a very successful use case. Potentially less widely used, as I alluded to earlier, was in pre-approving for credit and in credit scoring in general. And what we try to do at Chetwood is use what I would describe as explainable AI. So when we finish a model, it's very important to us that we can explain the score, we can explain which variables impacted the score, and that every customer score is unique, and we can very clearly report which were the factors that drove the decision for that customer. What you don't want to have is a customer in a situation where it's a black box and you cannot explain, why did you accept customer A and reject customer B? So that's very important. And I think that's something the regulator is very interested in.
Yeah, I agree on that. Maybe moving to JS, thinking about sort of what the wider Asian market, which obviously you're a key player within. Do those two sort of main areas of fraud and credit store, would they be your top two as well, or is there others?
Yeah, so banks is fundamentally the lending organization. So it's naturally become the primary applications. And then also, this is the money flow. So as a fraudulent transaction is the other key areas that we need to focus on. So, and then also as a cross-border payment is also the other areas we are doing at this moment. So it's basically the area is overlapping.
Yeah, and the payment side of things. There's a really interesting, it's a very much a British phrase where you go to apply for a loan and there's a comical catchphrase where it goes, computer says no. And that's kind of, I guess, what Jessica was alluding to. Maybe from sort of like the legal aspect of side of things, it's quite a dangerous situation to contemplate handing over a black box AI situation to lending. What's your sort of comments on that sort of area? What do you think the sort of like the legal obligations will be?
I think from a very legal perspective, especially when it comes to, let's say, credit scoring and rating, what we haven't seen is that regulators haven't actually taken away the onus from the company or the commissioner of AI, which means that regulators typically tend to take a stance where it's pretty much like, if it's your entity, which is the one coming out with credit scoring outcomes, for us it's pretty much the one liable for anything that was to go wrong. So if you're commissioning an AI backend, if you're absolutely using outrightly an AI solution, one, as far as liability and consumer protection is concerned, that's absolutely your responsibility. And in some cases, because it's a highly regulated activity in most jurisdictions, regulators have typically requested for more ethics being embedded into design. So by things like privacy by design or avoidance of bias by design, this is something that they have typically required companies to implement, at least from whatever we have seen thus far. But as far as the end product is concerned, for them it's the same.
Yeah. And maybe Jessica, sort of moving to you and continuing on that sort of subject, the kind of the concept that an AI could learn or have access to much more data than a traditional bank credit scoring system would have. I guess that then has more onus on the provider, such as yourself, to make sure, as you say, it's transparent, but that you're not teaching any bias into the sort of situation. Do you think the regulation will need to change on how we're using AI and what we're feeding it to enable that sort of regulatory body to be sort of happy with the fact of using it?
Well, I think, if we think about GDPR and European data privacy regulations, consumer PII, there's been a lot of movement forward in this space in the past couple of years. And certainly, I think all companies, including banks, are taking on board those kinds of things, data retention, making sure you're not hanging on to customer data that you don't have a right to. If we reject a customer, for example, and that customer has no relationship with Chetwood Financial, then we should not hang on to that information, and we shouldn't be utilizing it even in a good use case, which would be for credit decisioning modeling. We can't use that because that's not data we should have access to, right? And so I think all of that consumer data protection is really very important. And as you said, yes, it is the responsibility of the individual bank or financial institution to make sure that the algorithms they're producing are fully compliant. And I believe you can do that. And we are doing that, and making sure that we have full transparency into what's driving the models, the data that's being utilized, and we have the right to use the data, the customer data that we're using. And actually, it's for the benefit of the customer so that we can provide credit to customers that otherwise wouldn't have the opportunity to access credit. And I think the really misunderstood thing about AI is that there's the presumption that there's something black boxy happening there that's not scientific. But actually, we know that data is highly correlated. So whether or not I have a Gmail account is very highly correlated with my creditworthiness. Whether or not I have an Apple or a Samsung device is very highly correlated with my ability to pay my bills. And so there are things that show that there are nonlinear relationships between data, and that is scientifically proven and better addressed using algorithms like some of the gradient boosting decision tree models that we use at Chetwood that actually more accurately identify customer behavior than some of the traditional linear models. And so I really think what's important is just that the regulator continue to work with financial institutions and banks and just get comfortable with challenging and reviewing those models. And they need to build that expertise as well. They may not have that expertise in-house. And so we're going through that transition phase where, the regulator is going to get more comfortable and working with banks and using AI.
Yeah, it's interesting that you mentioned sort of having a phone, having access to Gmail. In the UK, there was, I won't mention the actual names, but a large credit reference agency was said to be utilizing people's, or potentially to utilize people's shows that they watched on Netflix to add towards their credit score. So thinking on those sort of lines, JS, is there a danger that by adding too much regulation, you'll limit the access to data for any AI module that you have and limits its potential to actually make informed decisions? Are we inherently sort of almost stifling the development of that AI?
Yes, that is a very tricky question. Government is beginning to understand that AI can explain the reasons is way better than the humans. Human has itself as a biased animal. So as the AI is naturally based on the numbers, so it can explain more without bias. So the government is beginning to adopt this kind of a new types of technologies. And then on top of that, regulations in Asia, especially in Korea, is beginning to adopt the using AIs to this kind of underwriting systems. And then even in that case, the data storage is where to put the data is very tricky. Is a critical issues that we all need to solve. So the government is providing some kind of guidelines. You need to store in this cloud or on-premise spaces, and then within the certain territory, complying with some kind of regulation of procedures. So that is that the changing is very rapidly. So, but still, to maximize our AI models, the data economy from A to B should be shared each other. So where to put the data is another issue. So we are trying to solve that issues. So one is that by regulation, and two is by technology. For example, like edge computing. So the models can be embedded into the end site. So the critical data does not transfer to the other sectors. So there's a lot of technological improvements that can solve this kind of issues.
Okay, that's interesting. Maybe looking at from sort of like the sort of legal aspect, or the variation of legal aspect across regions. There's obviously data privacy laws are quite different in many different places. Do you think that fundamentally will affect how how accurate or how much artificial intelligence is adopted in various different regions?
It will, indeed it will, because if one was to just see, let's say Europe has robust GDPR and privacy regulations. In this part of the world, in UAE, we are yet to have a federal regulation, but we have different free zones which have their own privacy laws. We have one of examples like Bahrain, for instance, they have their separate set of privacy laws. So to be able for AI to grow, to be able to get data which is, an absolute green data, so to speak, is so difficult. And even if one was to think of, let's say, data portability or anonymization, it's so difficult at the moment for especially such data in finance to be able to, to have an access to that. That we're really 10 years behind in this entire game. We will take a bit of time where even the regulators come out with regulations. For instance, most jurisdictions are not considered safe when it comes to transfer of data or portability of data. So perhaps, that means that perhaps you can't even enter those jurisdictions well at logic. So it is challenging. I won't deny that.
Mm-hmm. And maybe Jessica, coming to you for sort of a regional sort of idea. Do you feel, obviously you guys are very experienced with algorithms, machine learning and AI. Do you feel like you are at a disadvantage to some other areas which have maybe slightly leaner or less impactful data restriction policies?
Well, not necessarily. I think at least I'm in a fortunate position that London is a great center for data science. And in general, there's a lot of international data scientists that live in and around this area. And so in general, the learning is quite diverse, and we have access to specialists that have been to university and have work experience in other parts of the world. So I think overall, as you look across UK in general, you'll see quite a very high sophistication in levels of machine learning and artificial intelligence. And there's quite a lot of activity that happens across all industries, whether it's e-commerce or biology or chemistry research or some of the FMCGs, the retail businesses. There's really been a big development over the past 5 to 10 years in this space. I think if I go back maybe 10 years, there was a lot of talk about analytics and business intelligence and reporting and automation. And I think the conversation has very much moved forward in the past 10 years, just based on my own experience. So I don't necessarily think we're at a disadvantage. And in many cases, the regulation is just enforcing the right thing to do, which is that, you're not using customer information in a way that you shouldn't be.
Absolutely. Okay. Moving to sort of JS, thinking about probably the elephant in the room, which we all probably knew we were going to talk about at some point, and we alluded to the data biased, and how the concept of, if you feed information from a given demographic into a system, it will only think that that's true. As you said earlier, an AI is a very logical brain. If you send it, five people, and 3 of them tend to be black and 2 of them are white, it will assume the majority are black. What's your sort of thoughts in that sort of main sort of like key area that we're all discussing these days about data biased?
Yeah, so it's a key power, is a major power of AI is that the capturing that kind of trend very rapidly. For example, in the today, so we have four people, four males in the demographics, and then suddenly there's one more, the female comes in, and then AI can capture it, and then there's two ways of that of going forward. For example, it can move to the biased way in the end, but the other way around is that it can capture the as a changes of the populations. For example, in the credit card transactions, as a model A is that we are adopting. The pandemic situation has changed all the patterns suddenly. So AI can capture and adopt that into the new models. So from that perspective, it can remove like some kind of bias and catch the real trend in real time.
Interesting. I can see, Akshata, you nodding quite prolifically on that. Is that sort of an area that you've sort of seen yourself when it comes to sort of the bias question?
From a regulatory perspective, yes, in fact, and that's very interesting because it actually makes a lot of difference when we are speaking of AI in finance, and we were actually speaking to a few RegTech solutions a few months ago who were actually intending on doing exactly the same thing. Because from a regulator's perspective, what is absolutely important is that what is the kind of data that has been, let's say, processed backend, which I as a consumer am relying on. To what extent does that impact my investment decisions, and to what extent is there an advice involved in that, let's say, decision making? What is that advice coming from a backend AI solution, or has it been tampered with some form of bias? So then it becomes actually very relevant as to, one, what is it that I'm doing backend to, let's say, cleanse that process a bit, where I'm doing my own diligence to see if there's an involvement of bias anywhere, if, let's say, the requirements of ethics have been met, and at the same time, what is the level of disclosure that I'm going out to the client with? Like in let's say in retail investment decisions, I may not necessarily have the level of disclosures otherwise, but when it comes to, let's say, use of AI, how is my portfolio being treated? How is it that my credit score is being determined, and all those things? There's a lot of angle with disclosures that immediately comes into picture when we speak of this. So in that case, perhaps it is also essential that the angle of bias is included, and that there's a lot of conversation that at least we've seen in this part of the world where the demographics are such that it's a very international market. There are people from pretty much every continent, and investment decisions can significantly depend on those things.
It's really interesting. Maybe Jessica, coming to you in your sort of in Chetwood's specific area of sort of lending. Obviously, biased. A lot of people will sort of raise that as a massive red flag. Sort of the stereotypical, completely outdated concept of the man does the work and runs the household and therefore has all the credit rating. How do you think we need to sort of continue to develop AI to alleviate that bias?
I think bias is something that has always existed in terms of, if you are a model developer, you always have to account for bias in the model. And bias, really begins at the data level. So you begin by introducing bias into the model, by introducing data into the model that is inherently biased. So it's very important that you really go back to the beginning and make sure, are my data sources diverse? And let's make sure we're not using any protected characteristics that are overly biasing the model or influencing the model to a degree that we would not be comfortable with. So race, for example, is something that cannot be used for creditworthiness, and that's not something that should be used. And there are cases where bias is actually important and in the customer's best interest. So for example, if you're looking at shopping algorithms, you'll find that men and women shop very differently. And the kinds of things that I would be interested in seeing if I'm shopping would be very different from the kinds of things someone else might want to see. And so there are instances when you actually, instead of calling it bias, you call it tuning the algorithm specifically to the customer, right? And so it's always important to consider, what are we using the science for? What is the AI being used? Which industry? What is the application? And is it for the good or for the betterment of the customer? Or is there anything that could happen that would be to the detriment of the individual by introducing that bias? And so we at Chetwood Financial are very attuned to the risk of bias, and we have several metrics that we monitor within the algorithm to make sure we account for bias. And that can also be down to just what's happening in the economy. So for example, we've gone through a really broad macroeconomic challenge right now. We've seen rising unemployment across the board in non-traditional areas. So you might have customers that are traditionally very extremely creditworthy individuals that have now been impacted. And so therefore your model will be inherently biased, because in the past, you would have said maybe these particular sectors or types of employment are less risky, and now they have become more risky because of the COVID situation. So there's all kinds of bias that can happen in a model, and it's just the responsibility of the data scientist to account for it.
It's a really interesting point, and I kind of hadn't really dawned on me how much of a change to the data of this year is going to be on the next, maybe hopefully 100 years. And if you model everything on 2020, you'd have a very different picture of what the world is like if you hopefully wait 5 years and we're in a different position. We could probably continue this conversation for ages, but we need to sort of start running up now. I was going to come to JS and really just ask you if you could sort of sum up sort of like where you think AI has come and what your sort of aspirations or desires is for the future moving into 2021 and beyond.
Yeah, so what we are doing as an AI company is a linking between the data economy, where the credit is required, and a traditional bank and even the neobank, and then providing the credits. And then they want credit, but they have data. So they are providing data to us, and then we are the processor. And then we tell the banks, okay, please lend the money to these customers. So this is what we are doing. Okay, and then to do that, this situation changes rapidly. The data economy's data is rapidly changing, especially in the 2021, when the market turn around, all the demographic behavior will change. So what we are going to do is that we do all the process automatically. Oh, okay, this segment is getting better. So we sense it in advance, and then lend the loan more more competitive rates to the other competitors. So in 2021, what we try to achieve is that automating whole process, even the situation changes. So this is the aspirations that we are aiming to have in the next year.
Wonderful, thank you very much. And Akshata, similar sort of question to yourself. What do you think's happened and where are we going?
I think the way I see it from a very practical and both regulatory perspective, things are going to get, especially in finance, are going to get more and more customer centric. For instance, there's a surge in open banking, open finance in Europe already. Middle East is catching up to that, and like as we speak, there are so many initiatives that I know are there in digital ID space, open banking, open finance space, which are sort of picking up steam in this part of the world. And more so when we have solutions more and more coming like these, we will have more use of AI. The data collection is going to become more customer centric, the execution, the outcomes, the advice are going to become more and more customer centric and less towards the financial giants or the big banking giants. Banking will obviously get digitized, as we're already seeing so many examples. So yeah, I think that's what I'm also hoping for 2021.
Excellent. And Jessica, finally, your sort of thoughts.
Yeah, I think we will see a speeding up of the adoption curve in terms of access to digital banking and online banking, alternative financial services. We've certainly seen a lot of value placed in this year, the ability to operate digitally, and there will be less importance placed on having access to traditional high street banks or the physical need to go into a bank to manage your account. And customers will be turning more and more to these abilities to service their account and apply for credit and manage their financial balances and credit cards and all of their details in that kind of online banking environment. So I do expect that we will continue to see a speeding up of the adoption of these kinds of technologies, and we'll see a lot of business strategies changing as a result of the recent COVID challenges.
Absolutely. And I think that's kind of, I don't think AI and the machine learning is going away anytime soon. It's something that we're definitely going to be doing more and more of. And that's quite evident, I think, in the sort of conversations we're having now than we used to have a year ago, when we're much more talking about the specifics, as we've said. So it's fantastic to hear from all three of you. Thank you all for joining me today. It's been an absolute pleasure to spend time with you. And then just talking to our audience, obviously, we hope you've enjoyed the webinar today. We really hope that you continue to add to the debate using the hashtag FinTech Times AI Workplace, and please do follow us at the FinTech Times. But for now, that is all. Thank you all very much for attending. Thank you very much.
Thanks, Mark.
Thank you.